Good day, everyone. Welcome to 1stusFx Academy channel. This is 1stusFx, and in this video, we're going to be doing our gold weekly analysis. Okay, so just stay with me to the end. If you are just finding this channel, make sure you go over our videos and go through our videos and ask your questions as well. All right, so this is this second week of July 2026. All right, so we're just going to share with you our bias for gold because we trade gold. Gold is our major pair. We trade it a lot. All right, so first of all, let's go to the weekly time frame because this is a new week. So first of all, on the weekly time frame, you can see that the market is currently selling. We can see the current structure of the market on a weekly time frame because we have this low, we have this lower low, we have this lower high, we have this lower high. So the whole structure is already what? Bearish. All right, so for this week, what do I expect the market to do? Now this is we need to take note of this candle here. All right, so this is a candle we call a draw on liquidity. I'm just going to highlight it for you. This candle here, see this bearish candle, we call it draw on what? Liquidity. So I'm just going to mark out that candle's low as our draw on liquidity, meaning this is where buyers have their stop loss. Now you notice that this candle has a rejection wick because you can clearly see that the candle moved all the way here and then closed at this level. So this is a rejection candle, meaning stop loss is above these levels. So it's a liquidity zone. Now you notice that price has not yet purged it out here. It's just around the corner. Now if price should purge this out, most likely price will just continue to dump, and you know the market always has to find a way to rebalance itself. The next target will be at this previous what resistance, now turn what support. So but that's for another day. So for now, this is a new week. Now we're expecting the market to get to these levels. What is the reason behind that? Now let's go to the daily time frame. Now on the daily time frame, you can clearly see that we have a daily order block here. The market is currently reacting from. So this is our daily order block the market is reacting from. Okay, so you can clearly see last week closed below that daily order block. Oh, you can see it. Now take note of all these candles here. After the sell, the market made retracement back to the order block. So you can see the old retracement back to the order block here. Oh, you can see it. Awesome. So now I expect the market to keep dumping from there to sweep out this what? These lows that we have here. I'm just going to mark it out as a trend line. This low. So this is also a draw on liquidity. So basically a draw on liquidity is it's a candle, it's a bearish candle in a down scenario. All right, in a downtrend rather. So in this scenario we have a so you can clearly see that the bearish candle in this downtrend has not been swept out. You can see it. So this is the bearish candle, has not been swept out. So this is what we call a draw on liquidity. This is also a draw on liquidity. So let's just mark it out as well. Internal range liquidity. So let's mark it out as well, just for reference sake. And mind you, that's that's a what? I think that should be on Thursday's low as well. So there you go. So now we have this low, we have this low, and we have this low. So these are all three zones I expect the market to sweep out. Now it may not happen this week, but now you know what to expect. Now while we're expecting this, remember price is reacting from a daily order block. On a weekly time frame, price is bearish. On a daily time frame, price is still bearish. You can clearly see price is bearish. Okay, so let's go to the 4-hour time frame. All right, so this is our 4-hour time frame. Now you can also see this This is a drawn liquidity. This low I've already marked out. You can see it's a drawn liquidity as well. Now you notice after the market sold off, from here, the market made a retracement, swept out this what internal range liquidity. Let me just mark it out. Please take note of what I'm saying. It's highs. Good. So we see the market sweep it out and began to sell. Awesome. And you can clearly see it aligned with our what daily order block. Okay. I hope you're following. Okay, awesome. So this is basically what we expect the market to do today and this week. We expect the market to sell. First of all, take out these lows. Next, this low, and then eventually this overall draw on liquidity. Now this is Monday, and Mondays are usually days where there's a lot of manipulations in the market. So because of that, the market already opened with a gap. Let's go down to the 1 hour time frame. You can clearly see the market opened with a gap because the market closed here on Friday, opened here, made this high, and then it's currently selling. Okay, so market opened with a gap, and when you see gaps like this, what do you expect? You expect the market to what? To fill it up. So first of all, for the market to fill it up, it's going to look for a short-term area of liquidity, and we can see we have a short-term liquidity zone here. This low, always take note of it. If you know that I'm always marking out the lows and the highs because that is where liquidity is. So now I'm expecting the market to sweep these lows and probably mitigate this order block. Let me mark it out. This order block. So you see this bearish candle? Yeah, that one. So I expect the market to sweep out that low, mitigate that order block, and then buy. So where am I expecting to buy to? Obviously, you can clearly see that this is our what market closing price. All right, where the gap is. So the market is most likely going to sweep these highs out. All right, now I'm going to call that inducement. Why am I calling that inducement? Okay, so I'm calling that inducement because I'm expecting the market to sell from here. So this is an order block. I'm going to use it here, yeah, right here, there you go. So basically this is what I'm saying. I'm going to buy in here, I buy here, my stop loss is here, my take profit is here. Did you get that? So I'm just going to make it run figures. There you go. And then I'm going to sell here. My stop loss is just going to be above these levels. And where would my take profit be? I could take this, or I could hold it down here, or better still, I could hold it here. Now, whatever the scenario is, it's always best to lose the closest liquidity zone. So I'm going to use here. So just make it run figures. Let's make it run figures. And there you go. Now I could take multiple entries. All right. One entry here. And with this same. Okay, okay, so that's a second entry, and then I could take a third entry, same place, but now my target will be here, and Okay, it's a bit higher. And there you go. So 3 entries, 3 targets, seems to stop loss. All right, so this is basically what I would expect the market to do to play out. Now all you have to do next is to what? Wait. I see the waiting part is the difficult part, but you also have to learn that waiting is part of trading. So you have to wait and see how the market plays out. So basically, this is what I'm expecting for this week. Today is Monday. Let's see how Monday closes, and then the week closes as well. If you have any questions, you can obviously ask in the comment section. If you want us to drop an educational video on any of the concepts we just used, like order blocks, inducements, draw on liquidity, how to pick targets, where to place your stop loss, and all of that, make sure you join our academic group. The link is in the description as well, and make sure you join our next class. Also, you can join our mentorship program, and also subscribe to the channel as well. So I'll see you in the next video, and I'll see you in class. Have a great trading week ahead of you. Once again, this is 1stusFx. Have a nice day.